Well, welcome to this week's Cattle Call. I'm Susan Littlefield. Lots happening within the market trade, including some decent prices for our guys in the north. But we'll talk about the disparity that we're seeing, and is there some kudos that need to go to some cash negotiators? Well, we're going to dive right in. As you can see, Brad Kooima is on the screen. He is with Kooima and Varlick out of Sioux Center, Iowa. So let's start disparity. North versus the South, not a civil war, but definitely a little price action going on.
Some days it feels like it's close to a civil war. Well, there's a little political, difference in opinion from the north to the south too.
Yeah.
Not all of the South. The cow-calf people, I think, are a little more understanding of the perspective that we might have in Nebraska and Iowa. But you bring up a good point, and I'm a dinosaur, but without looking it up, I think my memory is clear enough that I don't think I've ever seen this kind of disparity. Where up here today, yet I was bid this morning 125, and the South is struggling to get 119. The $6 is a lot now. I think there's a couple of things in play here. Like you alluded to, I would like to think part of the thing is that we are indeed cash negotiators, and when the supply is tight, which it is up here, tighter than expectations, and we're nice and current, then we can be a little more of a price maker rather than just sitting back and taking whatever that they'll give us. We also have a little bit of an angle our way here where the choice select spread isn't anything like it was, but it's still $21 or about there. So there still is some incentive for a packer to chase the choice. The South always brags about their yield percentage, but we can certainly brag about our grade percentage. And I think that's been helpful as well. Like the South, Texas particularly, but Kansas close to that too. They got too many cattle. And the second tier of quality of their cattle is particularly where they're having a hard time getting them moved. So there's trucks, right? So when you get $5-6 a part, you're getting to that window where, the freight is going to allow these packers to export cattle, obviously, to the north. And I do hear a fair amount of anecdotal stories, evidence that indeed, if you're in the parking lot of Dakota City or Schuyler, Nebraska, that there's plenty of Kansas and Oklahoma and Texas trucks showing up there. So, I can't do anything about that. It is what it is. Let's get them dead. Let's get some normal kill weeks under our belt. The last 2 weeks have been quieter, smaller because of the holiday. But they're scheduling a huge Saturday this Saturday, and hopefully we go several weeks and we can get through this thing. I like some of the subtle things that I'm seeing under the marketplace. So we just got to get the South a little more cleaned up.
So having said that, and you're talking expanding kills, how much of those cattle are coming from the South to the north?
Well, there's certainly I think it's going to be even worse next week than it was this week. I get it. The resentment if you're a feeder in northeast Nebraska and you're going like, well, how come we got to kill those guys as cattle too? Reality is what it is. We've got to get them dead because it's the market. I too kind of, part of the sarcastic Brad is going like, well, why do you have so many cattle down there? The economics of feeding cattle for us up here has been very, very poor. Are the economics for you to feed cattle there that much better? Just saying, asking for a friend, as they say. I think we can get through this deal. Luckily those cattle are lighter. It's just a matter of getting enough traction here with absenteeism and blah, blah, blah. And let's not have any plant breakdowns, and let's not have any computer glitches and cyber attacks. And we've had about everything you can imagine, right? Let's just get back to normal for about 6 weeks and let's get on down the road.
Will the fund roll continue for the next couple of days?
Day 2 of the Goldman roll, and it's really been apparent. I was worried about the roll this time too after watching how the hogs acted. Our market's getting smaller and smaller. Open interest 300,000 or barely that even. And so when you get a thinner market, when the funds move, it's just more obvious because there's just not as many players, unfortunately. So when you're thinking about knowing that a fund has to sell a bunch of August cattle, well, obviously somebody has to buy it from them. I was hoping that, with the 125 Northern cash and August at 119, that those somebodies maybe would be some speculators that think they're a little cheap. So normally when I get to day 3 of that 5-day roll, I start to look a little more favorably on the front month. That'll be Monday. I think if we do this next Friday, maybe we'll do it next Wednesday, right? But hopefully by the time we do this next week, I'm going to be bragging that looks like August has caught. I think we're within a day or two of the August cattle catching, frankly.
But there's definitely some good things, Brad, happening within this market for cattle, especially when you look, for example, May exports.
You said it. The demand, like I've tried to reiterate over and over, is not good. It's not great. It is fantastic.
Yep.
Pick the word you like, both globally and domestically. Exports for May, a record. This weekly export number, a solid number again this morning. I don't have enough superlatives to say about it. And look at the price that we sold that beef globally in May. One of the things we miss a little bit, and one of the nuances that I get a kick out of when I listen to economists and stuff talk about it, and I'm not an economist, right? But we don't throw meat away. The measure of demand, in my view, is how much do you have, and then how high can you sell it? If you go back to the 80s when people were worried about heart disease and you name it, that beef was bad for you. It didn't matter how much you had a heck of a time selling it for whatever price. Okay. Now we're producing quite a bit of it and we're selling it higher than we've ever sold before. So anybody that's saying like, I don't know about demand, it doesn't get it. The demand is spectacularly good. We got to figure out how we get our piece of that pie now. Come on. Obviously you can't hardly, read a farm publication or anybody that's worth their salt that's commenting on the cattle market without seeing various notations of, continued pressure being applied to, let's see if we can develop a more fair market for the producer.
All right, lots of things to look at. We look forward to our conversation continuing next week. Just a reminder, folks, commodity futures and options do involve substantial risk of loss. They're not suitable for all investors. That's this week's Cattle Call. Joining me, Brad Kooima. I'm Susan Littlefield on the Rural Radio Network.